negative experience during the time you started to trade and in the first of your years, or you?
Yes, I made the mistake in the early years as I made good money in selling call options, which was a safe way to do it. And then I took some of that money and I bought options. I thought I was, bulletproof. I thought I knew everything. And so I made the mistake of spending money buying options, and I lost some money by buying options. So I learned the mistake not to buy options, to only sell options.
Okay, maybe you can a little bit tell for the audience what you mean about call option or buy option or sell option.
Sure.
What?
So we all know the stock market's been around for hundreds of years. In fact, the New York Stock Exchange was founded in 1792. So for hundreds of years, all that the universe knew was to buy and sell shares. That was it. In 1973, a group of Irish people in Chicago decided to invent this thing called an option. An option is where instead of you buying the share, you can buy the option to own the share. And you just have to do two things. You have to fix the price and fix the length of time. So you can go to the market and you can say, I want the option to own the share. So let's say Apple at the moment is trading at, let's say it's trading about 123 at the moment. No, it's about 114, 115 at the moment. So let's say you're nervous that Apple is going to do really well in the future. It's going to go to maybe 250 in the future. And you say to yourself, well, I don't have enough of money to buy Apple now, but I know I'm going to sell a house in 6 months from now. And I know I'm going to have some money in the future to buy Apple shares. But my concern is by the time I have the money, Apple could have doubled from maybe $115 to $250 or $230. And now the shares moved away from me and I don't have, it's raced away. So what you can do today in the market, you can say, I can buy an option today to own Apple today at 115, but I have that option will last for 6 months. So today I can secure a price of 115 and I have 6 months to come up with some money to buy Apple shares. And even if Apple is $230 6 months from now, I can still buy it at 115 because I've locked in the price today. So that's what an option is. It gives you the option to buy the shares at a fixed price and buy a fixed time. And so that's why they were invented in 1973. They were invented because if you look at the market began to take off. We had the oil crisis in 71, 72, 73, and then after that shares started to go up again. And that's why options were invented.
So the options have been 30 years on stock exchange?
Yes.
Okay.
And if you look at the history of the options, it then moved on to Australia in 1976. Australia started to do options, and then later on England. There's still a lot of stock exchanges in the world that are not mature enough and still don't do options. They will do them in the future. So it's very exciting for you guys to learn about options because it's the future of the stock market environment. Right now, today, in the New York Stock Exchange, $50 trillion will change hands, the buying and selling of shares, but only $2 trillion will change hands in options. So it's 96% of activity today is buying and selling of shares. 4% is the buying and selling of options. So it's still very much a minority sport. If you actually study the volume of options from 1973 till about 1983, there was very little volume because people did not understand options. And still today, a lot of people do not understand them. I'll give an example. The Dublin Stock Exchange, about 8 years ago, they experimented with options. They chose 5 companies out of about 25, and they had, for 6 months, they had options, and nobody bought them. We went into the stock exchange and we said, well, if you make TICN the education arm, the official education division of the Irish Stock Exchange, we'll teach people what options are, and you will get some options business. And they said, you should have been here 6 months ago. And I said, why? Because they said, we took a decision 6 months ago to scrap options and never did it.
Okay, so you start to trade or start to learn trade. Where you gather the information to make first decision, and where you
Yeah, in 1996 at the Wealth Mastery course, we were introduced to Value Line. Value Line had been around since 1931. Value Line's a very interesting story. It's we all know in 1929 was the Wall Street crash, the famous crash of Wall Street. And the Americans made a big mistake because they turned a recession into a depression. Because if you actually read the small print of your mortgage, if the bank wants to, they can call in all the money today. So even though you think you've got 20 years to pay your mortgage, it's actually written in the small print. So what the Americans did, they did two fatal mistakes in 1929, is they increased interest rates and they called in the mortgages. So they ruined, people became financially ruined overnight because they didn't have the money to pay for their complete house. And then inflation and interest rates were crazy. So one individual founded Valueland in 1931. He said, if I can give human beings like me and you independent information that is reliable, conservative, and we can trust it, then people will make smarter decisions about the stock market in the future. And today that company is run by the granddaughter of the founder. And they still have that same ethos. Independent, factual information you can trust and rely upon to make business decisions on. And Warren Buffett uses Valueline as well. So if it's good enough for Warren Buffett, it's good enough for us here in the room tonight. And that's what we use. And that's why we did so well when the dot-com bubble burst. Because we were only picking companies that were extremely low, but good quality for money. So it's very, the secret of success in the stock market is very simple. There are two ways to lose money. One, you buy a bad company, it goes out of business, and you lose all your money. So the opposite of buying a bad company is make sure you only buy the best companies. So that's rule number one. Only buy the best companies in the world. The ones that are financially strong, the strongest, stable, and have good prospects to grow in the future. The second way to lose money is to buy a share for, say, $20, and it goes down and you panic and you sell it for 10. You've just lost $10. So the reason why Warren Buffett is so successful is he has two rules. Rule number one, don't lose money. Rule number two, don't forget rule number one. So if you hold a share long enough, as long as it's a good share, as long as it's a good company, if you hold it long enough, it will do well over time. And Warren Buffett owns shares today that he bought 40 years ago. And that's how he's generated his wealth. He says the maximum you should hold a share is 5 years. He says, I want you to imagine you bought a share today and they close the stock market for 5 years because you have no intention of selling it. So you don't need the market to be open for 5 years because you're going to hold it for 5 years.
So you was introduced to Valueline, and where you gathered all the trading knowledge and the things about when to sell call and technical analysis and fundamental analysis.
Yes, everything I learned. I learned all about charts, all about value lines, all about options at the Wealth Master program.
With 6 days.
6 days.
Okay, wow.